Welcome back to Midcap Radar. We have a corporate on our show, and it's a very interesting corporate. Antony Waste Handling Cell is in focus on the back of its Q4 numbers. Net profit has more than doubled on a year-on-year basis, and EBITDA margins too expand. Jose Jacob, the chairman and managing director of the company, joins us now to discuss further. Good afternoon, Mr. Jacob. First up, how would you rate Q4? There's been a very sharp jump as far as profitability is concerned. So can you sustain this momentum going forward? FY25, what is the guidance that you've given to the street in terms of revenue, margins, as well as bottom line?
So historically, our CAGR growth has been 20 to 25%, and we have been achieving that. And we believe that we'll carry forward the same performance.
When you say... All right, Jose. You said that, 20 to 25%. When you say 20 to 25%, what is it that you're meaning? Because the revenues that I look at is... Yeah, go ahead.
I would say it's that 20 to 25% in 3 to 4 years. In our style of businesses, when we win a contract, it takes about 18 months to full-fledged start it. And that's the reason we look at, and our contracts are long-term contracts. The period is 7 to 25 years. So we take a CAGR growth of 20 to 25% in every 3 to 4 years or maybe 5 years.
Okay, because, I'm looking at the last 1 year, your revenues have grown just around 2.2%. Operating profit too has not grown much. Margins have improved from 17% to 20%, but they've been 25 to 28% in the past as well. And, the net profit, while it has grown, it's factors other than, operations that have led to the net profit growth in the fourth quarter. So, to that extent, what is a realistic target on revenue, margins and profitability for the next year?
So, our operating profit, our operating revenue was 766 crores, which is a 19% increase compared to the last year. Last year, it was 643. And the EBITDA margin, if you see FY 2023, we have increased from 153 to 198 crores. So there has been quite a good improvement, impressive performance on the EBITDA side.
So despite this, despite the kind of performance that you've seen in FY24, you're actually factoring in a much higher number as far as FY25, 6 and 7 is concerned, because you're giving us a 3-year CAGR. It's a two-part question. Would you like to give a specific margin as well as a PAT guidance? And number two, recently you had analysts over to your WTE plant at Moshi in Maharashtra, and you've given them a guidance of annual projected revenues from that particular facility at close to 65 crore. So where are we on that front?
So there are one is the waste to energy project in Moshi, which will have a 1 full year full-fledged revenue from there. And another business which we had, one is construction debris, which will also start generating revenue from the month of June. And third is the biomining contract, which we have won, and for CIDCO, which also the revenue will start from this June. And when you add all these three, then definitely we look forward our revenue as well as our EBITDA margin will be good.
Okay, so what will be the revenue that will come in from the refuse derived fuel, that is biomining, and what is the potential of revenue coming in from the CIDCO contract?
CIDCO contract will be roughly, I think this coming year, we should have at least 40 odd crores. And construction debris, we will get around 35 to 40 crores. And
the biomining thing is a part of the construction debris, or is that separate?
No, it's separate contract.
So how much will that give?
That will give around roughly 40 crores.
Okay, so 40 crores from biomining, 35 crores coming in from construction debris, and another 40 crores coming in from CIDCO.
Yes, construction debris, yes.
Mr. Jacob, let's now move to another stream of revenue for you, which is the vehicle scrappage business. You said that the TAM, or the total addressable market for you, is close to 8,000 crore over here. What is the total cost that you will bear in order to go up and set up a facility for this particular project? Along with that, what is the kind of revenue stream you're penciling in as far as FY25 is concerned, and what projects do you already have in place?
So we are looking to venture into vehicle scrapping business as well as tire recycling, and for which we are discussing with various equipment suppliers. And roughly the capital cost for such plant is around 10 to 15 crores in that range for scrapping, vehicle scrapping, and for tire will be around 5 crores. So we already have found a land, and we are working on all the statutory requirements when it comes to pollution control board and getting licenses from the government.
You know, more than 40% of your revenue comes in from MMR. Just wanted to know how much of that comes in from BMC, because the BMC elections haven't happened for the last couple of years. So once that happens, wanted to know if there is any sort of political risk that comes by with the contracts that you have.
No, our contracts are long-term contracts. It was signed, the waste processing was signed somewhere in 2009, and the collection transportation was signed somewhere in 2016 or something like that. So it's a long-term contract, and for us, we do not have, being a waste management company, which is a very important work to be done in the city, we don't face any political risk.
So when do these contracts come up for renewal, just before we let you go?
The one in, no, the waste processing will end in 2037, and collection transportation maybe another 2 years left.
Mr. Jacob, thank you so much for your time over here. Thank you for the clarifications, especially towards the end. But that's the time we have with you today. We'll hold you to these numbers in the coming quarters as well. But right now, let's slip into a short break. We'll put focus on ITC as proxy advisory firm IIAS asked shareholders to vote against the demerger. Stay tuned.